Every 3 months, I like to do an update on global markets and what's been happening, what that means for the typical investor. And this quarter, I'm going to cover some of the underlying questions which haven't yet been determined by the market and what that might mean for typical investors. If you like the content that we produce and you haven't yet subscribed, it'd be great if you did click on the flying colours icon and do that. I would really like it if you actually liked the video because it would help us to get more visibility on YouTube. Thank you. When I say questions that the market is trying to answer, I mean important issues that the market hasn't worked out exactly what the answer is quite yet. So I think that right now there are three big questions that the market is pondering. One, will there be a global recession? Secondly, have we broken the back of inflation or will it come back with a vengeance? And lastly, what do we make of the AI phenomenon? How much of it is hype and how much is real? So if we think of those questions, they're affecting most asset classes. So a recession would mean probably a fall in the value of equity markets and probably a rise in the value of government bonds. And in the last quarter, we've seen fears of a recession reduce, and many investors are now quite complacent about it. But I think that there is still a realistic chance that we do get a global recession. And so I don't think that question is quite answered yet. And I would suggest that people be careful about that. The second question about inflation is definitely unanswered, and there's a lot of uncertainty in the market. So we have seen inflation come down after the highs after the COVID experience, but we haven't seen them come down dramatically, and we haven't really hit, in terms of core inflation in Western markets, the target that people are looking for of 2 to 2.5%. So there is a real chance that inflation might reaccelerate. That would be negative for most asset classes. So it would be bad for bonds and probably bad for equities. So we hope that doesn't happen, but it is quite important, again, that people realize that it could happen, and you need to have some form of protection against that in the investments that you hold. The last thing is AI, which is really intriguing. And like everybody else, we've been looking at it and experimenting with it, and we like what we see. The question for us with AI is separating the technology from the investments. So my simple take on it is that all of the people who are currently developing AI are using the same methodology, which is large language models trained on pretty much on the same data, the World Wide Web, using very similar methodology to do this. So it's quite likely that they'll end up in similar places because they've gone about it in a similar way. So unlike other areas of technology where people really own something unique, and it's patented and it's differentiated and they can charge a real premium price for that, here, I think there's a real chance that AI will continue to develop and improve, but the competitors are so alike that the margins that you can make and the revenue you generate will disappoint. The companies are spending hundreds of billions of dollars a year building out the systems. So I think that there is a significant chance that there could be a disappointment. Now, saying there's a chance there will be and predicting there will be are two different things. I've been talking about investing today, so I must remind you that your capital is at risk.